Hello, it's Chris Hynes from Wealthi. I hope you're doing well. Today I just wanted to run through a quick breakdown talking about the latest monthly housing chart pack that's been released by CoreLogic. Now, there's a lot happening in the Australian property market at the moment. There's a lot of attention, you could say, being focused on how interest rates are going to behave over the next few months as we lead into, you could say, the body of this year. So that's something that we're definitely keeping our eye on at the moment, but it's also important to look at how property is performing as a whole. Look at how the auction clearance rate is behaving as well, and if that's moving up in an upward manner, and we're continuing to see an influx of successful auctions and also the volume of auctions as a whole improving or increasing. So we'll run through a few of the figures today, give you a bit of an overview of the market as a whole, how the capital cities have been behaving over the you could say the start of this year from a monthly perspective, and then looking at the year-to-date figure, an increase as well. But if you've got any questions come the end of this video, please feel free to reach out to myself or the team, and we're all more than happy to have a chat. So we'll get started, and we won't run through all 38 pages of this document today. We'll run through the markets themselves and some of the charts, and it'll paint a pretty good idea in your minds about the states that we are looking at the moment, and hopefully answers a few questions that may be playing on your mind. So to start off with, and as always, CoreLogic like to put a breakdown of how much Australian real estate is now worth as a whole. And as you can see, residential real estate underpins Australia's wealth. That's now sitting at a massive $9.7 trillion. In terms of, well, when you're comparing that with other large markets in Australia, like your superannuation, your listed stocks and commercial real estate, you can see that Australian superannuation sits at about $3.4 trillion. So real estate as a whole, residential real estate, is about 3 times the amount or the total volume that the superannuation is. Same goes for Australian listed stocks, and then commercial real estate, you're looking at about $1.1 trillion. So residential real estate is growing substantially. If we go back to 6 months ago, or about 4 months ago now, and we were looking at reports, or this exact report that was released at the end of last year, and that figure sat around 9.2 to 9.3 trillion dollars. So you can see the amount of volume that is being put through the residential real estate market at the moment. A lot of deals are transacting, a lot of properties are changing hands, a lot of people are still interested in buying real estate, and you could say in some sense that the boom isn't quite over yet. We've had an extremely strong strong start to the year from a residential real estate perspective, and that's something that I think we'll continue to see for a couple more months. I think we'll continue to see some strong growth over the next few months, and then we'll probably see some form of correction. I think interest rates definitely going to have a part to play in that, and we'll discuss that a little bit later on. So to start off with, so how has the Australian market or Australian dwelling values been behaving the last 3 months? So as you can see on the left-hand side of the screen, residential real estate values are up 3.4% from an average perspective in the Australian dwelling market. Overall performance for the 12 months is about 22.5%, 22.4% for the 12 months to the end of January. And in terms of capital cities, lower value segments now leading growth. In the 3 months to January, capital homes saw the top 25% of values rise 1.9% compared to 3.5% across the lower 25% of value. So what that's telling us is that the bottom half of the market, or that lower quarter of the market, is seeing the largest growth at the moment. And you could say really closing the gap between the top 25% and the lower 25%, but a lot more growth is being seen in that lower 25% market, but still seeing some relatively strong growth as a whole in the top 25% of the market as well. Now we'll just run over the capital cities or the regions more so just very quickly. So leading the way in terms of growth in the 3 months to January is Brisbane. They've seen another 8.3% growth over the past 3 months to January. Adelaide sitting very closely behind with 7.4% growth in the 3 months to January, followed by your Canberra, then your Hobart, and then we're looking back at Sydney and also at the Perth market. And then to finish things off, Melbourne at 0.8% and Darwin at 0.7%. And when looking at Brisbane and Adelaide, they're still very much a lifestyle appealing place to live. It's a more affordable place to purchase a property when you're maybe living in your Sydneys or your Melbournes. It's a more affordable price point. You've got all the amenity that you need. You've got the lifestyle bonuses as well. You've got fantastic beaches on your doorstep. It's a more livable city, you could say, as well. And I think we're going to continue to see an influx of migration into these places like Adelaide and Brisbane now that borders are reopening, and you've probably seen some of the articles that I've been releasing over the past few weeks, but now we've seen borders reopen and we have the need, or Australia has the need, for skilled migrants to be coming into the country. I think it's just going to further boost demand for places like your Brisbane and Adelaide. It's a more affordable place for these people to migrate to, opposed to moving to your Melbourne or your Sydney. But of course, we will begin to see that influx of migration into Sydney and Melbourne. More so Melbourne, I think, when we're comparing those two cities, but we'll see an influx of migration into Melbourne, which is definitely going to help the demand for Melbourne real estate that little bit more as well, which is further going to drive prices up that little bit more as well. So some very strong figures as a whole, though. As you can see, the average for the combined cities, or combined capital, sits at 2.6%. For your combined regionals, 6.3%, and then Australia as a whole, 3.4% change in the 3 months to January 2022. Now we'll quickly run over the 12 monthly changes. So as you can see, Brisbane is leading the way once again, seeing 29.2% growth over the last 12 months. That's followed by Hobart. Hobart, very similar to the Adelaide and Brisbane story. You could say it was relatively untouched through the pandemic as well. So people looking to escape the restrictions that they were stuck in some of these capital cities like your Sydney and your Melbournes, that you could say saw the harshest of lockdowns. People were escaping to places like Hobart, and Hobart's a beautiful place to live. We're seeing a lot of investment in Hobart at the moment across the entire island. So it's definitely a market that we're keeping an eye on at the moment. Now, I guess the biggest surprises of these figures that you can see on the chart here is Melbourne. And I was expecting Melbourne to see some stronger growth over the past 12 months. I know they had one of the harshest of restrictions in the country, but I think that there's still a lot of demand for Melbourne. Melbourne's population is set to surpass Sydney's in the next few years, and that's something that we've got to be mindful of. That gap that you could say between house prices in Sydney and Melbourne is going to continually creep closer and closer to each other. So I think that Melbourne really presents a fantastic opportunity if you were, let's say, someone that was looking to get into the Sydney market. You can't quite afford the Sydney market or afford what you want in Sydney. You want to be in a capital city that's seeing a lot of growth, transformation and regeneration, and Melbourne somewhere where you can get in at a slightly more affordable price point. And you're going to benefit from that population growth over the next few years, which is going to close that gap in terms of price point. How is it going to close that gap, you might be wondering, but it's going to be fueled by the demand for owning real estate in Melbourne. You've got limited supply of available stock at the moment as well, so it's going to create more of a competitive environment for the real estate market in Melbourne, and we will see some very strong growth in the Melbourne market, I feel, over the next few months and probably towards the end of the year as well, but definitely one to keep in mind. Now, I just wanted to run through the auction clearance rate figures very quickly, and auctions across Australia have been, you could say, growing in volume continually over the start of this year. We're seeing more and more properties will be put under the hammer, and we're continuing to see that number increase quite dramatically. This week, there was 2,405 auctions across the capital cities, which was up 35.2% on the week prior. And then looking at last week's figure, reflecting on the week prior to that, it was another 42.5% as well. So we're continuing to see that volume increase. And as well as seeing that volume increase, we're also seeing this success rate trend in a relatively positive manner as well. This week was slightly different to last week, but the figure itself, when we were comparing the two, this week's preliminary auction clearance rate sat at about 75.9%, 69.7%. When you compare that to last week's clearance rate, that's sat at about 72%. So we're continuing to see that figure increase more and more. And there's been some really, you could say, some standout cities as a whole. Brisbane's been performing extremely well from an auction performance rate. We're continuing to see momentum gather, and people are still interested in buying properties under the hammer. So I think that we're going to continue to see the volume increase for a few more weeks to come. I think people still have this eagerness to buy property at the moment. A lot of people have accumulated a large amount of equity in their current property as well. So they're now looking to use some of that equity to go and purchase a new home. Now we'll just run through the capital cities very quickly individually. So as you can see, Melbourne had the busiest auction market this week, with the number of auctions being held in excess of 1,000 for the first time this year. Auction activity was up 77% compared to previous week. And in comparison to last year as well, it was up 62.7%. where there was 635 properties taken to auction. With the 895 results collected so far, 70.3% were successful, and that preliminary auction clearance rate is sitting just below where last week's figures were, but I'm sure when we look at the final figures, that number will be slightly higher. Looking at Sydney quickly, 892 auctions were held this week, up from 600 last week and up 42.7% compared to this time last year. Despite the increase in volume, Sydney recorded its highest preliminary clearance rate since October at 79.6%. So just looking at the smaller capitals very quickly, so Canberra recorded its highest preliminary clearance rate for its third consecutive week, with 81.9% of the 117 auctions that were held across the city. That's followed by Brisbane, which saw a clearance rate of 80.7%, Adelaide 80.4%, and Perth 73.3%. And then Tasmania, there were 4 auctions held this week. One was a successful auction, but in terms of those other 4 cities, your Canberra, your Brisbane, your Adelaide, and your Perth, extremely high auction clearance rates. The market is still extremely buoyant. People are still very interested in buying property. We're going to continue to see interest and activity in the market, I feel, as these border restrictions are gradually continually eased as well. It's just going to create more demand for property in these cities. We've got limited supply, as we all know, and it's just going to create more frenzy and more activity, I feel, for the property market. Now, there's a lot of talk around interest rates, as we all know, and will interest rate rise cause a property boom? And I think it's important to understand how this will affect, if interest rates do rise, how this will affect the property market. And of course, it will have some slowing on the activity, the amount of volume that we're seeing transact through the real estate market, but I don't think it's going to cause a crash. I don't think there's enough, the Australian real estate market is a strong market. It's just by its nature, it is a strong real estate market. It's never seen a crash of more than 25% in its life in history. So I think that's something that we have to remember. Now, interest rates may rise and it may make it more difficult. I think it'll have more of a part to play on homeowners opposed to investors. It may make it a bit tighter for your mortgage payments, but at the end of the day, it's going to be better than renting because you own that property and you're still going to be paying that mortgage off. Now, as a whole, and the pandemic, you could say, has been a blessing in some sense for people who already owned real estate. And let's say you owned $1 million property. Over the past 12 months, we've seen prices increase on average about 23%. So that means that you've accumulated about $230,000, $240,000 in equity in your property, meaning that an Australian household is now richer than it has ever been, thanks to the growth that we've seen in the Australian real estate market. Now, banks have already shown their tightening of lending restrictions and their lending criteria and increased the buffer that you had to adhere by when you were going for an investment property. I think we'll continue to see maybe a slightly more you could say a slightly increased buffer when it comes to how much you can borrow, but that's not going to be the end of the day. We've had that in the past. It's not going to raise substantially. It'll be a slight increase to that buffer, but it's not going to make it any more difficult to borrow the money. Now, many Australian households have taken advantage of the current low interest rate environment and are 3 and 4 months ahead on their mortgage payments as well. So a lot of people are ahead in their repayments in terms of their mortgage payments, which means they're not going to be out of pocket if they let's say they are tight 1 month, they're already ahead in their mortgage payments, which isn't going to leave them out of pocket as well. And our economy is bounding along, and unemployment levels at an all-time low, and with the prospect of wages rising ahead, most households should not feel mortgage stress as a whole. So I think there's enough there. I think the Australian market is a strong enough market that it won't be too badly affected by an increase in interest rates. I think the interest rate rise that we'll see, it's not going to be so dramatic that it's going to make it impossible for people to go and borrow money. You have to remember, we want to keep the market moving. We've just gone through a pandemic. We want to continue to see that money being thrown into the economy. So as a whole, I think that we've still got some positive months ahead from a growth perspective. I think that the increase in interest rates, once that does come into effect, isn't going to have a detrimental effect on the market. It's not going to cause a crash. As I mentioned, the Australian real estate market is by nature and by history a strong market to be invested in. Look back at figures of the GFC, for example, and you can see that house prices didn't drop in the grand scheme of things as badly as the rest of the world had to endure things as well. But I hope this has answered maybe a few questions that may be playing on your mind at the moment. If you've got any questions, please feel free to reach out to myself or the team. We're all more than happy to have a chat. And if you'd like to get your hands on this report as well, please feel free to reach out. We can send that across to you. And you can, by all means, have a look through this. It's got some information about the individual cities, housing cycles, how rents are behaving as well, sales and listing volumes, and the lot. So I hope you've got some value out of this. If you've got any questions, please feel free to reach out. And I look forward to hearing from you all very soon. Thank you. Bye.